recently for the 13K move. All right, so here's our kind of layout here. Whenever we're trading, we always want to work from the top down, never from down to the top. All right, so we starts off with the weekly chart. Here you can see that I have the weekly. Okay, so if we look at the overall, sorry, let me get in frame. If we look at the overall structure of how the market is moving, we are moving in what direction? Up. We're moving up. Okay, all right, which means that we need to look for longs, not for shorts. However, right, most recently we've had a very big move to the downside. This normally isn't bad. Okay, we can make plays off of this, but the real money moves will be in conjunction with what direction we're moving. So targets that we need to look for, right, is a pullback into a area of interest. Now, areas of interest in a bullish market could be recent swing lows, right? So if you look here, this would be a recent swing low, right? We moved up. This would be the most recent swing low before this huge leg. So whenever price moves back into this bottom part, right, it generates interest, and we need to look for signals to take longs out of here. So if we look here, the low of this candle, the lows will be up here, is 52.0550. So let's go ahead and mark this out. If we don't get it to the T, it's not that big of a deal. We can edit it later. Okay. Okay. All right. So we're already looking interesting on the weekly because we took all of this out and we're still closing above. That's a very significant sign. But remember, this is the beginning of a new week. This is on a Monday. This is showing what Monday looks like. Okay. So we know, okay, Monday usually is the day where orders are set in place. Tuesdays are usually the days where we have a little bit of moves or we have an entry. Wednesdays are usually the large part of the moves. All right. Thursdays we have retracements, and then Friday we have a final move to liquidity. Usually, okay. Not always, but this is the general profile of what it looks like throughout the week. Okay. So we looking interesting on the weekly. All right. I like that. Now let's go down to the daily. Okay. So this is what it looks like on the daily. This candle is on Monday. Let me replay so that way you can't see what's going to happen next. So this is what it looks like on Monday. All right. This is a huge tell that we're going to be moving higher. Okay. I love this. The fact that we took all this out on the weekly time frame and daily, right? And we closed above. This is beautiful. This is also known as turtle soup. Okay, this is known as turtle soup. This is one of the most, basic concepts of trading, right? We take out the bottom of orders or the top of orders and we move away. So because Monday profile looked really good, all right, I'm already keeping my eyes open on Tuesday. We don't trade on Mondays. I mean, we do, but if it looks good, but usually we don't trade on Mondays. I would say 80% of the time I do not trade on Mondays because Mondays are usually consolidation. You get caught up moving up and down and it's just complete garbage and you don't want that, right? So let's look here. All right, give her the mark. We go down, right, to the 4 hour. Now remember, we're looking on Tuesday, not necessarily Monday. So Tuesday is going to be opening right about here, maybe a little bit after that. So we'll just zoom forward. All right, now Tuesday to open, this down close candle is going to act as something as we know as a order block. Order blocks are used, all right, to block, right, to stop from moving in the direction to continue higher. Okay, now this is on the 4 hour, right? This is a good sign, but we're not going to take a trade off of this. We have a specific trading window time, right? Usually I like to wait until about 9 o'clock to look for a trade, and I'll tell you why in a second. So this looks good. All right, let's go down to the 1 hour. Okay, so our 9 o'clock is here. This candle right here, 9 o'clock. All right, so we're going forward, we're going forward, we're going forward. Now, this is where it gets really important. Okay, let me get rid of this order rejection block. Okay. All right. Whenever you see this candle 9 o'clock is known as purge candle. It can happen between 9 and 10 o'clock, but the purge, all right, is taking orders, right, out of, or sorry, knocking people out of their orders before the market actually moves in the appropriate direction. So what you can do is you can usually look before and see if you're using the higher time frame, right, channeling down to the lower time frame, it'll be a lot more accurate. So right now we're looking at the hourly, which is decently, it's moderately high. So let's take the low of this candle. Remember, your lows are up here, all right, which is 52.2750. We mark it out. Oops, just a little bit low. Okay, now watch what happens right at 9 o'clock. This is why I like to wait to take the trade. Wait a second. 9 o'clock, the purge candle. We knocked everyone out. Where did we close? Below or above? Above, right? Remember, does anyone remember what this concept was called? We did this on the higher time frame as well. This concept is called, remember, turtle soup. Because price moves fractally, right? It moves from 1 week all the way down to the 1 minute. It doesn't change, right? As long as you have the higher time frame, the lower time frame will match up with it. So because this purge candle makes sense, right? That 9 a.m. It comes and it'll target. As soon as I saw this, I thought, okay, we're getting long. It's an easy long, right? 1 week we took the liquidity. On the daily, we took the liquidity. 4 hour, we have an order block down here, right? Hourly, purge candle closed above. So I'm looking at longs all day, every day. So I'll zoom down, I'll work my way down, right? 15 minute, 5 minute, etc. And then I'll just look for an entry, right? My entry will usually come after we close above the area that was souped. Now there's multiple entries. Like I don't want to overload you, but you can enter off a fair value gap, you can enter off of order block, you can enter off of a breaker, right? But usually these strong moves will have a breakaway gap, and it'll be a little hard to get in. So you may have to go down to the lowest time frame to get in, right? So once I saw this huge move up, right? This distribution is what we call it, right? Manipulation, distribution. Okay. I thought, okay, let's get long right here. Touch that bottom of the fair value gap, right? Stop loss would be down here because the purge is over. This would now be the lowest point. We don't have to go all the way down here. If you want to, you can for turtle soup entries. You could put at the very bottom, but if you're less risk adverse, if the timeline adds up, you could do it there. So let me get rid of this so that way it doesn't kick me out when I go to the higher time frame. So the next question is, we have our entry. We went through all of the processes, right? Let's look for our exit. All right. Now, I like to take exits on, you can take it on the 4 hour, or you can take it on, the lower time frame. But if we're taking on the 4 hour, this is a little bit of an advanced theory that most people don't know, right? I'm looking around for targets. You can target here, but I really like this point of interest. Friday to Sunday. This is called new week opening gap. Okay. This could be a very good target. Usually it'll happen at the beginning of the week, right? So that's a target, right? But, if you're trading down here on the hourly, this could be a target as well, right? Because remember, with turtle soups, right, you need liquidity. You need to knock people out before you make a run, right? So this would be the most recent high. So this would be a pretty viable target. Okay, so let's go back down to the 1 minute and let's watch this play out. We're just targeting the most recent high. And look at how there is no resistance on this trade. Let me lower it down. Very little resistance. Like it's just moving up, 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 takes everyone out again, up, up, up. order blocks, order blocks, order blocks, and then it hits, right? This is a high probability trade because from the top down is how we worked, not from down up. If you go through this process every single time, your probability, your win rate will go up significantly. Now, I'm telling you this, right, because it took me so long to get through this. Like, everyone wants to make a trade on the 1 minute and then watch it go up and down and you know, get crazy with it, and they like the feeling. We don't care about that. We care about making money, okay? And the best way to make money, one, take less trades. You're using the 1 minute, you see entries all over it. Like, I could have entered here, could have entered here, I could have entered here, I could have entered here, I could have, it's all BS, okay? Work your way top down. You'll eliminate so many distractions. You'll eliminate so many false entries. All right. And the best part about it is you're moving in the direction of the market, right? You're going with the flow. Think about the river, or sorry, the ocean, right? Ocean's moving this way. Waves are moving this way, right? For you to easily move right through the water, you're not going to go against it, right? You're not going to counter it. You're going to move with it, all right? And things will be significantly easier for you. You're not going to win every time, right? But your win rate will go up, okay? All right, so that's how we move through the market, channeling from the top down. I didn't go over entries that much. I just wanted to go through the process of how I went from the higher time frame to the lower time frame, how I had my targets. Now let's see if it hits new week opening gap. I'm curious, right? I already know the answer, but just for you guys, I'll move this up to 10x. Huh, interesting. Remember turtle soup? How it happens on every time frame? Interesting, huh? Knocked everyone out. And then we moved even higher. Whoa. Knocked everyone out. Moved even higher. Oh, knocked everyone out again. Moved even higher. We did end up hitting new week opening gap. So I'm showing you this because, the most important part is knowing the overall picture, not the lowest picture, right? If you have the highest picture, it's kind of similar to playing a card game, right? If you know what cards if you even know one card that your opponent has, you have a significant advantage over them. Do you know what we call that in trading? We call that an edge. All right. If you have an edge, your chances of winning are higher. And guess what? If you have an edge and you do the same thing over and over and over and over and over, you will be profitable. Okay. All right. So this is pretty much the overall breakdown of what I went through to make that trade. Okay. And this is what it looks like on the hourly chart, right? Weekly take. 4-hour order block was down here. Even an hourly order block was down here, right? Think of liquidity on the purge candle, targeting most recent high, or you could target new week opening gap. So that's pretty much the trade, okay? All right, let's see where the market's at now. Okay, we're moving down. Interesting, huh? Probably gonna move down right here, take everyone out again, then move higher. Let's see. But yeah, if you guys have any questions, leave them in the comment section down below. If you guys want me to work through another trading process, then leave it in the comments. But yeah, if you think about it, guys, if you make one of those trades every single week, right, $13,000 a week, would you be happy with that? Of course, right? It's not going to be $13,000 every time, but it could be $1,000, $2,000, $3,000. Every week, one trade a day. What else more can you ask? What more can you ask for? You take an hour, 2 hours out of your day to trade, and then you have 22 hours left in the day to do whatever the hell you want, right? So that's the name of the game. Sacrifice now, be disciplined now, and then later on it'll be beneficial for you. So, all right, guys, thank you for listening. If you have any questions, just leave it in the comments down below.